Let's begin with our first big story. The International Monetary Fund, IMF, has called on Nigeria to lift the remaining foreign exchange restrictions and scrap the system of multiple exchange rates in order to revive the Nigerian economy.
That recommendation came in the Washington-based fund's regular assessment of Nigeria's economy, and it came on the heels of a recent visit by a team of the IMF officials to Nigeria to assess the economy. IMF emphasized that stronger macroeconomic policies are urgently needed to rebuild confidence and foster economic recovery in the country.
All right, the question is, will it really bring about recovery of Nigeria's economy? Well, our guest in the studio is the Director of Research and Advocacy, Lagos Chamber of Commerce and Industry, Vincent Nwani. And joining us from Abuja is the Head of Banking and Finance Department, Nasarawa State University, Uche Uwaleke. Good morning, gentlemen. It's good to have you.
Thank you very much for having me.
Well, now the IMF is weighing in on this Nigeria's multiple exchange rates and all of that. Is it really at the root of what we're seeing in the economy, especially in the market, the forex market?
Yes, again, we need confidence to return to the forex environment, so that operators in the economy are able to transact without fear. We have always said that economic agents, they don't like uncertainty, even if they take risk. Having said that, in an economy like Nigeria, where you have multiple exchange rates, somebody said it's up to 10, but I can count up to 5. The CBN official exchange rate, the interbank exchange rate, the exchange rate exclusively for oil marketers, I think that's 280 at some point.
Yes.
Exchange rate for pilgrimage. Now, last week or 2 weeks ago, we now have a new exchange rate for BTA. I think that is why.
For BDCs, for example?
Yeah, for BDC, we have for BDC. We're already going to 6. So if we really do our research, maybe it will up to 10.
Something about 10, 11.
Presidency may have their own exchange rate too. We don't know about that. So in this environment, it creates confusion. And not just confusion, but it also gives room for arbitrage, give room for transparency issues and even temptation for operators both in the commercial bank and the big directors in the central bank, for people, But when you have a single exchange rate, especially a market-driven exchange rate, it is a forces of demand and supply decide the price. So in that case, you know exactly what you are going into. Instead of somebody, because it's importing a petroleum product, is taking at 280 or 285. You go to Interbank, you get something else. You go to pilgrimage, you get to BTA or whatever, school fees abroad. And this creates a lot of confusion. And this is exactly what the Lagos Chamber of Commerce and the industry have always advocated from day one. Apart from the fact that the exchange rate is multiple exchange rate and putting investors, especially foreign and domestic investors, in confusion, we also have a lot of things that doesn't encourage people that even have the forex to bring it in. So as all of these multiple exchanges is happening, it affects inflow of autonomous sources, such as export proceed. Even diaspora remittances are at all-time low. A lot of people are doing all this. Somebody's calling it barter trade. Give me, I give you, and money doesn't come the way it should come.
So you're obviously not for the multiple exchange.
No.
Okay,
it's affecting investments.
Let's get the views of Mr. Uwaleke, who is live for us in Abuja now. Thank you very much for hanging on. Let's have your take now. Have the multiple exchange rate system done Nigeria good, and how much?
Yeah, thank you very much. Let me start by saying that the IMF Article 4 report on Nigeria for 2017, has a number of recommendations that are good for Nigeria. One of which is, giving attention to infrastructure, facilitating the ease of doing business in Nigeria, as well as facilitating access to funds by the SMEs. These are all good. There is also the suggestion that the central bank should step up the monitoring of banks, considering the deterioration of asset quality of banks, as well as the high non-performing loans, the the fact that some of them are already beginning to show stress signs, undercapitalization and all that. So there is need to step up the monitoring. All these are good recommendations. But a few of them too need critical assessment so that we don't take everything hook, line and sinker. And one of which is what you mentioned, the issue of multiple exchange rates. IMF is of the opinion that Nigeria should unify the exchange rates that we have in Nigeria today. Of course, there's no doubt that multiple exchange rates encourage arbitrage, encourage round-tripping, and corruption.
Well, let me butt in here.
About that.
Let me butt in here, if you would allow me. How did we even get here in the first place? That Nigeria is talking about 10, 11 different exchange rates. How did it happen?
Yes, the point I want to make is this: that there are countries, pursue tiered exchange rates for several reasons. This has been widely documented. If you read a book by Mohammed Arian, done in 1994, he talked about the experience of Arab countries and even Latin American countries that at one time or the other, had no choice but to adopt tiered exchange rates. And it's usually for reason of discouraging the importation of certain items when a country is facing currency crisis to conserve foreign exchange. It's also for the purpose of even subsidizing the import of certain items that are critical for the economy, as well as also making it possible for government purchase of foreign exchange, to be less costly, especially given the fact that government plays a dominant role in the economy. So for these reasons, you find countries having multiple exchange rates. In the case of Nigeria, yes, we have multiple exchange rate as it were, but I don't think it's as many as people are making out. I am not speaking for the central bank, but I know that there is a reason why we are having an official exchange rate, for example, and also having for official transactions for critical imports, and the one now that we have, the 360 that we now have for PTAs, BTAs, and so on. Because if we didn't have that, considering that our reserves, we don't have reserves to really, defend the naira. Reserves are depleting. You need to protect, some certain sectors of the economy, and the best way to do that is to, subsidize them. We have, cases of countries that have, gone through that. I mentioned Venezuela, for example. Venezuela at one point had as many as four exchange rates. 6 bolivar to the dollar, 12 bolivar to the dollar, 170, and of course the black market. But of course, last year, Venezuela had to, again, as a result of currency crisis, reduce it to 2. So the important thing is that we cannot, in Nigeria today, afford to say we want to unify rates, because in my view, the only way you can do that now is to float the naira, and that would be dangerous for us as a country. Imagine if petroleum importers were importing fuel at exchange rates that are not, subsidized. By now, you wouldn't be buying fuel, petrol at the price you're buying fuel. So inflation will soar. Egypt just attempted that. In November last year, Egypt floated the Egyptian pounds. What is the situation in Egypt today? Okay, in the short run, you have a lot of distortions in the economy. Inflation rates in Egypt went from 19% in November last year to nearly 30% now.
All right, Waleke, let's bring it to the studio here. Of that too, okay, Mwani, weigh in here. I'm sure Kemi wants to take you up on what he just said about not being able to, that we should not actually begin to think about unifying the rate. So where does that leave Nigeria? If on the one hand we're saying, look, this multiple rates are not good for us, And on the other hand, there are experts like Waleke who's saying, don't unify.
What we need.
I think we should take this conversation a little bit away from the letters of textbooks.
Exactly.
Yeah, because this is purely practical. I sit and I watch the economy on a daily basis and watch businesses and get feedback. So we just talk about the textbook. The truth is that he said we have few exchanges. We have so many. At least I've counted 6. You know, that is clear. And if I want to repeat for the benefit of our viewers, okay, there is no need. Having said that, is multiple exchange rate good for the economy? No, Venezuela is not even a good model to compare Nigeria with at all. It's a sad and crisis economy as you speak. And the Egypt that was mentioned, go and see what is happening in the Egypt economy. The way Egypt have managed their currency issue over the last 1 to 2 years is now becoming a model and a reference point for emerging markets like Nigeria. Go and study exactly what is going on in Egypt and see how the economy is expanding, and a lot of them are coming in. Friday, we welcome a very huge delegation from Egypt. Having said that, multiple exchange rates is not good for this economy. Up to 6, up to 7, like he said, it breeds corruption and everything. And he talked about subsidy. So the meaning of that is that we've taken away subsidy by just crediting the account of oil importers, and just that is not happening again. But this time, instead of them getting this forest at a particular market-driven exchange rate, you just subsidize. So subsidy is still there, and it's important that we calculate and know exactly what this value of subsidy is. But one of the issues he's talked about, because I'm just responding to some of the points he made. One of the points he made is that if we float and have a market-driven exchange rate, that we don't have the reserve to back it up. That's not correct. As of February 28th this year, we have about 5.4 billion US dollars that we tracked that refuse to come into the country. These are export proceeds that are looking into Nigeria, and they can't come in. I'm not going to talk about FDI that is still waiting, because nobody wants to bring in his money at a discounted rate. So these are the challenge. And what are we even subsidizing?
Okay, you know what? We're going to take a break at this point. Of course, viewers on TVCE, please be reminded you can continue to watch the show on TVC Nigeria, on DSTV 418, GoTV 45.
Indeed, and Free TV 701, StarSat 270, and Star Times 307. You're watching TVC Breakfast now. Welcome back from the break, and we've been talking about the IMF, advice, so to speak, to Nigerian authorities here, expressing concern on the lean green multiple exchange rate policy, urging Nigeria to perhaps, bring it all up into one system. Perhaps that will help the country, indeed help the country, as the country, of course, continues to experience a recession. But thankfully, things are looking up. Let's get you further information. We still have our guests at this time talking about Vincent Nwani from the Lagos Chamber of Commerce and Industry, and, of course, Uche Waleke from the Nasarawa State University. We will, of course, get more perspective from them, but let's feed you more information on the IMF story at this time. The country has urged Nigeria's federal government to lift its remaining foreign exchange restrictions in order to revive its economy, which is in its first recession in 25 years. The recommendation is coming on the heels of IMF's assessment of the Nigerian economy, which has continued to contract since the first quarter of last year.
Yes, indeed, absolutely. Now, economic growth is projected to pick up only slightly to 0.8% this year, 2017. Now, due to some increase in crude oil production and price of commodities. Now, crude sales account for more than 90% of foreign exchange earnings and 2/3 of government revenue. IMF noted that the country's fiscal deficit increased to 4.7% of the gross domestic product in 2016, up from 3.5% in 2015 due to revenue shocks. The economy contracted by 1.5% in 2016. Vincent, I wonder what your projections would be for 2017, 2018 with what I just put out there now. Is it looking good against the backdrop of, first, of course, the multiple exchange rates? Recession is still there. Inflation is still hovering somewhere around 18%, am I correct? So what's the outlook?
And the point where I break before is that even when we are running multiple and crisis exchange rates, inflation was still growing. So saying that if you float that inflation, you know, is inflation really bad? Yeah, it's bad. But what is bad is uncertainty about inflation, inability of economic agents to predict whether price will rise, at what rate, and when it will rise. Not inflation. Really, inflation that moves with growth is a good inflation, but that is not the subject matter. Are we expecting the economy to grow and come out of recession? Yes, we fall in line with IMF prediction, but that is also predicated on a lot of factors. The government just came out with the economic and growth plan that actually say what they want to do, how they want to do it. You know, if that plan is followed judiciously and all arms of government come together, especially the monetary and fiscal authority, we're still seeing a lot of divergent views. One of the trusts of that economic and growth plan is that interest rates have to come down. But the monetary authority, the CBN, is still pursuing tightening monetary policy. So that's a challenge. Businesses are already borrowing money at 25–30%. If you SME are borrowing up to 60% because they have to go to microfinance bank and borrow 5% monthly, some of them 8% monthly. No business can survive in this type of environment. So there should be complementarity between the fiscal authority and monetary authority, and we are not seeing that happening.
And we've been hearing that forever. Nothing seems to be happening in that particular department.
In that department. All right. Let's get you more facts now. With the World Bank, that's been in talks with the federal government for more than a year now over an application for a loan of at least $1 billion. And the African Development Bank has also $400 million on offer. Talks have stalled, though, over economic reforms. Nigeria has multiple exchange rates, which creates distortion in prices, hurts businesses, and adversely affects foreign direct investment, FDI, in inflow. At this point now, let's get Mr. Waleke to speak for us from the Nasarawa State University. Of course, you are also an observer of this trend. Now, there appears to be lingering disadvantages of the multiple exchange rate system. Of course, Vincent here is totally against it, and you apparently think it's good for our system. But would you still retain your opinion now when we look at all the ways multiple exchange rate system has affected our businesses, uncertainty still bedeviling the system? What's your take?
Yes, thank you very much. Please get my point. I am not in support of an economy having multiple exchange rates. I've told you that it leads to some disadvantages, such as arbitrage and corruption. All that I've said is that a tiered multiple exchange rate system, usually not more than two, is sometimes necessitated by the fact that you are having a dollar crunch or you are facing a currency crisis. Now tell me, is it theory that the central bank, for example, is the major supplier of forex in Nigeria? Is it theory that oil accounts for over 90% of our export earnings, just a single commodity? Is it also theoretical that the demand for dollars in this country is about 4 billion on a monthly basis, while what we earn is less than $1 billion on a monthly basis? So under that kind of circumstance, how do you throw the fate of the Naira, at the mercy of market forces? Okay, so I would like you to ask those who are saying, for now, the rate should be unified. Just how should we do that? In one case,
all right, Waleke, if you say the rates should not be unified, what are the options then? Because it is obvious the multiple exchange rates are not good for the economy, and the IMF is saying, look, Nigeria cannot continue to operate within this uncertainties. But before I allow you to respond to that, let's shed some more light on what we're talking about. Now, from the onset of the Nigerian economy, from the onset, the Nigerian economy has been bedeviled with the phenomenon of multiple exchange rates. Of course, you've heard that over and over again already. The historical background to this development is the implementation of the Structural Adjustment Program, SAP. Yes, do you remember that one? Introduced 3 decades ago, involving the adoption of market-determined exchange rates as against the hitherto fixed regime. In 2006, the CBN achieved a convergence of exchange rates, but it didn't last for long, and the Apex Bank experimented with a lot of approaches such as the second-tier foreign exchange market, of course the tier system which Waleke just referred to there, the Dutch auction system, DAS, retail Dutch auction system, amongst others, before it finally birthed at the floating exchange rate system in June of 2016.
So there are presently 11 official Naira-dollar exchange rates. We have the pilgrimage, that's at 197 to the dollar, customs duty, which is at 285 Naira to the dollar. The third is the budget benchmark, and that is at 305 to the dollar. The interbank rate system is also selling at 315 Naira to the dollar. Fuel imports at 316. International debit credit card is at 319 Naira to the dollar. Ngozi, so we're looking at the lowest about 100, and that's for the Islamic rate now.
For the pilgrims,
for
yes.
the pilgrimage rate, and now we're getting to as much as 345, and
Indeed.
we're not done from what the slides are saying.
Absolutely. Now, Travelex rate is a 345 Naira to the dollar. Airline special rate $355, or Naira actually, to the dollar. Ah, that would be the day when you have $355 to the Naira. Now, Western Union is $375. Why am I fixated with that now? 375 Naira to the dollar. Bureau de change, 395 to the dollar. Of course, the CBN has pegged what the Bureau de change can actually sell to the end user. All right, so now black market rate at 488 to the dollar. Now let's just quickly finish with this. It is important to note that the existence of minimal exchange rate deviations between different segments of the domestic foreign exchange market is not uncommon. But the international convention, the tolerable margin of deviation between the official and any other rate should not exceed plus or minus 5%. You want to break it down for us? Let's really have an understanding of what I've just, put out there.
I just want to start by saying thank you for showing this. This clearly put the framework to the reason why we are here today. Number one question to the central bank is, how do they come up with this rate? What is the calculation?
Yeah.
What is the consultation that led to these crisis rates to start with? Is it out of, as the spirit-led rate? No economy can function like this.
It doesn't appear that this is an exhaustive list.
You just wake up in the morning, you bring out a rate, look at, from 197 to 380 something.
To 488, as a matter of fact.
A rate is 197, your budget is, so everything is even under predicated. The only way is still market-driven exchange rate, where you know that there is integrity, there is God there. The forces of demand and supply. Because we can't operate like this.
Yeah, but the CBN is now looking at
it's good we subsidize,
creating a convergence between the interbank rate and the parallel market. With all of these interventions, about $2.something billion so far have been pumped in, and as we hear now, the CBN is ready to pump another additional.
We are saying that as they manage all these crisis and multiple exchange rate is the worst. The crisis is causing, because you talk about foreign exchange coming only from CBN, sale of foreign. It's not. No, if we really liberalize it, money will flow in. Autonomous sources. I talk about export proceed, about $5.4 billion. Stacked with nobody want to bring it in, because Vincent, we don't want to take it at a cut.
All right, Vincent, we'll continue our discussion on this rather interesting topic now, right after this break. Don't go away. You're watching TVC Breakfast.
All right, you're welcome back. We're looking at Nigeria's multiple exchange rates. Of course, if you're just joining us, our guest right here in the studio is Lagos Chamber of Commerce and Industry Director, Research and Advocacy, Vincent Nwani. And also our guests all the way from Abuja studio is of the banking, or he's actually the head of banking and finance department, Nasarawa State University, Uche Waleke. All right, gentlemen, thanks for, shedding light on all of these issues. I'm sure for the ordinary Nigerian, these things are really, really complicated. What they want to know is how does it affect their lives? All this talk about exchange rates, multiple or unified for that matter. Now, this question is to you, Uche. Now, let me just quote this. IMF says external adjustments highly needed to protect foreign currency buffers and reduce vulnerabilities. Now, shed more light on this. What exactly does this mean? Because it sounds like Yiddish to me. You want to shed more light on it? And does Nigeria really have any influence on this external, adjustments that IMF says is highly needed?
Yes, it still boils down to the exchange rate issue. IMF is of the opinion that the rate should be, unified, and I've told you why I think that, in my view, at the moment is would be suicidal for the Nigerian economy. By unification, they mean allowing market forces to completely determine the value.
Quote this: IMF says external adjustments highly needed to protect foreign currency buffers and reduce vulnerabilities. Now, shed more light on this. What exactly does this mean? Because it sounds like Yiddish to me. You want to shed more light on it? And does Nigeria really have any influence on this external, adjustments that IMF says is highly needed?
Yes, it still boils down to the exchange rate issue. IMF is of the opinion that the rate should be, unified, and I've told you why I think that, in my view, at the moment is would be suicidal for the Nigerian economy. By unification, they mean allowing market forces to completely determine the value, of the naira. I want you to note something too that is in that report, because Vincent talked about. In one breath, he talked about unifying rates. In another breath, he talked about high interest rates. You see, you can't, these things go together. When you unify exchange rates, it's very impossible, especially in the short term, to have a lower interest rate. Even the IMF made it clear there in that report that Nigeria should unify rates and follow that up with a tighter monetary policy and fiscal consolidation.
Yeah.
Now, let me explain. Let me further explain. Now, tighter monetary policy means that the current 14% benchmark interest rate in the IMF's view is low. 22.5 cash reserve ratio and 30% liquidity ratio. All that should be increased. And IMF is also worried that broad money supply is expanding at 19%. And why should that be the issue? Should that be the solution when we are in a recession? When the economy is in a recession. So they also talk about fiscal consolidation and improving, shoring up non-oil revenue. And the important thing, they are happening there is increasing the VAT rate. Can we afford to increase the standard VAT rate in the country today?
All right, Uche, let me come in at this point now, still on this multiple exchange rate system. The guest with us here, talking about Vincent, had even questioned the way the Apex Bank, CBN, went about, apportioning this rate for that, category, numbering 11 at the moment. Are you satisfied now with the way now CBN has been, doing, also apportioning a particular exchange rate for a particular set of consumers, so to speak? Now, do you feel that system has been clean enough?
Let me reemphasize that I'm not in support of having multiple exchange rates. In the first instance, I'm not too sure there are as many as 11. But I am not in support of that. I think we can consolidate all of that to, say, a two-tier system. You see, when I mentioned Venezuela, I wasn't mentioning Venezuela because we should follow the model of Venezuela, but I was trying to say the effort of that country, the effort that country made, when it also found itself in this kind of situation. Look at Egypt, for example. I also mentioned, why did I mention Egypt? Because Egypt floated its currency. When you are saying unifying exchange rate, you are more or less saying we should float the naira because that's what will unify the two rates. It was done in Egypt, yes. The rates were also unified in Egypt. When it was done on November 3rd, the Egyptian pound was exchanging for about 8 Egyptian pounds to the dollar. The black market rate was 17 Egyptian pound. But after the currency was floated, the rates were unified. But again, unifying at what rate, at what price? As we speak today, exchange rate in Egypt is high. But again, let us even isolate Egypt, because Egypt, for us to compare orange with orange, we have to bear in mind the fact that we are not even asking for any loan from IMF. Egypt got a loan of $12 billion from the IMF. They already have the first tranche of 2.75 billion, which has helped them to correct their balance of payment deficit. So, but that is not the case for Nigeria. We are not asking for any loan from IMF at the moment. So, saying we should throw the fate of the naira at the mercy of market forces, for me, would be dangerous. Inflation rate, you have just said it, is hovering around 18%. If you float the naira, you can imagine the impact that will have on inflation. You can imagine the impact that will even have on our current efforts to get out of recession. If we do that, you can bet that even the growth rate of 0.8% the IMF is projecting, although in our economic recovery and growth plan for 2017 we are projecting over 2%, that will not be realized. As I said earlier on, when you unify, you must tighten monetary policy. Otherwise, inflation goes haywire. Yeah. And then tightening monetary policy means increasing interest rates and also making it difficult for these small and medium enterprises to even access funds.
Okay, so, let me bring it to the studio then. So, Vincent, now, Waleke is saying that, look, Nigeria is not planning to take any loans anyway. Don't forget, President Buhari actually toyed with the idea of some $30 billion. We don't know where that one is right now. The African Development Bank has some $1 billion or so set aside for Nigeria. It's given a $400 million tranche already, the first tranche, but it held back the others because of the Economic Recovery Growth Plan, which it says is not clear yet. You touched on it earlier. Of course, we don't really know what exactly is in that document, especially the how. How do you plan to get out of this economic recession and moving the country forward? Maybe you want to give us some of the high points of this economic recovery growth plan. And then the issue of declining assets quality in the financial services sector is something the IMF has touched on too. Maybe you want to...
The Economic and Recovery Growth Plan was released about a month ago plus. Everybody was happy because it was February. It was fairly clear where the government want to go, and that is the first time we're seeing something we can even work on as far as this administration is concerned. But having said that, there are also indicators that we do this, we get this. And one of those is that you go into that document, it says flexible exchange rate. It was written in that document. And now we're talking about flexible exchange rate, and now somebody is saying if you do it, Nigeria will be in crisis. So this argument we're bringing post economic and recovery plan is just showing that this plan might not really work. That is one. And that document also talk about removing the restrictions, forest restriction. And one of them people are not mentioning is this 41 item, the almighty 41 item, which we in the private sector say that if you unbundle the 41 item, you get about 720 lines of products and services, and CBN have shut out that. That is also creating a lot of confidence crisis in the sector, and we're seeing that.
So you're saying that ban should be lifted?
Yes, of course, it has to be lifted because you cannot be saying that you want to do market-driven and you shut out certain things. It has to be market-driven. Market-driven has integrity, and I talk about it has some God factor in it. So what are we subsidizing? You are subsidizing pilgrimage. You are subsidizing school fees.
But I wonder if
is that the things we needed to subsidize?
I wonder if we have really succeeded in giving government any option at all between multiple exchange rates and the unified rates. What's in between? All right, it's time to end it here.
So
we'll
many to say on this.
Yes, indeed.
It just strikes me how, you know, it's another topic, talking about this this list now on the exclusive list, so to speak, of the 40-something businesses, but yet it's still related because, of course, the country needs to get out of recession. No time once again.
Okay.
All right.
All right. So thank you so much, Vincent Nwani of the LCCI, Lagos Chamber of Commerce and Industry, and of course, Uche Waleke in Abuja, Head of Banking and Finance Department, Nasarawa State University. Thank you, gentlemen. We hope to have you again sometime soon. All right, there's so much to talk about in the business world today as we focus on the Nigerian economy. That's correct, Ngozi. A few hours from now, trading will begin on the floor of the Nigerian Stock Exchange. Let's join Oluyemi Dada for updates in the world of business.
Much of our work will come later in the day. I am just going to give updates of key issues as they close the weekend. The International Monetary Fund, IMF, has called on Nigeria to lift the remaining foreign exchange restrictions and scrap the system of multiple exchange rates in order to revive the Nigerian economy. The recommendation came in the Washington-based fund's regular assessment of Nigeria's economy. The report came on the heels of a recent visit by a team of the IMF officials to Nigeria to assess the economy. IMF emphasized that stronger macroeconomic policies are urgently needed to rebuild confidence and foster economic recovery in the country. Auditors in Lagos State have been charged to ensure transparency and accountability in all their dealings. This is the objective of an ongoing retreat organized by the state government aimed at addressing the challenges auditors face in achieving their mandate. Participants and government officials here agree that an effective audit function will help reduce wastages and fraud in the civil service.
Given our recent history as a nation, the audit function cannot be overemphasized as a critical tool in ensuring that public administrative processes, particularly with respect to public expenditure, monitoring and control. At the end of this retreat, the audit function will add value to the quantity of and quality of governance and by extension, the standard of public service delivery in Lagos State.
In the whole of Nigeria, this is the first Audit Service Commission in Nigeria. And we know that we are trailblazers. And as such, in order to keep up with this, we have to look beyond this commission to see how we can involve other stakeholders so that others can come in to Lagos State, which is the center of excellence, to emulate us.
The process of business registration may soon become easier for Nigerian entrepreneurs. The country's Corporate Affairs Commission has now initiated reforms in enterprise registration. We have details in this report.
Registration of businesses in Nigeria can now be processed online within 24 hours. Officials of the Corporate Affairs Commission say the action is meant to enhance productivity in the economy. The Commission, collaborating with the Presidential Enabling Environment Council, have carried out series of reforms to achieve results faster.
Reforms is supposed to create changes in the environment. It's our wish that the reforms will bring drastic changes in the economy of this country. Because not only foreigners, even those who live in Nigeria would like the reforms. That will increase their source of income and earnings.
On our own part, we've simplified the process for registration. We have reduced the costs, we have reduced the steps, and it is now faster and cheaper and more convenient for Nigerians to register.
All right, Oluyemi Dada there giving us the business update. It's something you can look forward to every morning on TVC Breakfast, of course.
To know where your money is going.
Yes,
and what projections.
Absolutely. All right, on the dot of 8, there will be time for the news update. Ike Chukwuobienu is standing by. And of course, we'll take our break and then come back and talk about more of the economy and, of course, your money.
Absolutely important.